Intel is scheduled to report its quarterly financial results on October 23rd, 2025, after the stock markets close in the United States. So investors are asking me if they should buy the stock before the company announces earnings, which could have huge implications for the stock price. As you might be aware, the stock price is more volatile after an earnings release, moving by as much as 20, 30, 40, 50% in some cases, because investors watch these results and make changes to their portfolios based on what they see from the company in the quarterly financial update. So it's critical to evaluate what to look forward to, and I'll answer if I think Intel stock is a buy before it announces these results. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Intel last provided investors a quarterly update on July 24th, 2025. In that update, they reported second quarter revenue of $12.9 billion, which was flat year over year. Furthermore, they informed investors that in the upcoming quarter, they don't expect much improvement, forecasting revenue between 12.6 and 13.6 billion. At the midpoint, that would be 13.1 billion, which would be a 200 million increase from the previous quarter. So not very much improvement. And that's been the worry from investors with Intel, is they've made all these capital expenditures, investing tens of billions of dollars in the foundry segment, with little to show for it just yet. Now, in recent months, they've announced huge deals with the US government and with NVIDIA, suggesting that they're starting to see the benefits of those massive capital expenditures, and also suggesting the importance of Intel as a US semiconductor manufacturing company, which there are relatively few. Most semiconductors are manufactured outside of the United States, and so the US government is trying to encourage the semiconductor manufacturing industry inside the United States, which gives Intel a tailwind, a competitive advantage when going to negotiate with some of its customers. It can sell that as a selling point, and everyone can benefit as a result of that made in USA selling point that the current administration is really trying to push. The new CEO saying that they are laser focused on strengthening their core product portfolio and our AI roadmap to better serve customers. We are also taking actions needed to build a more financially disciplined foundry. And that might be a subtle shot at the previous CEO, Pat Gelsinger, whose strategy was a aggressive to say the least, push into expanding its foundry business. The previous CEO, which was forced out, spent tens of billions of dollars aggressively expanding Intel's manufacturing capabilities, not only expanding the supply or expanding the capacity, but also improving the quality, investing in latest leading edge technology from ASML and other suppliers of machinery to make sure that Intel has the most advanced capabilities in semiconductor manufacturing. The company is on the cusp of seeing the benefits of those massive investments made over the previous 5 years or so, and investors are hopeful that Intel will achieve success in this category. Intel's stock price has been on a rally in recent weeks and recent months. Of course, I'm happy about that. I've had Intel stock rated as a buy all year long here in 2025. So the major category I'm seeing improvement with Intel is in the company's cash flow and free cash flow balance. In the previous 6 months, the 6 months that ended on June 28, 2025, Intel's cash flow from operations almost tripled to 2.863 billion, up from 1.07 billion. So that was critically important for Intel, which had been generating a very low level in this category and even negative in some instances. And this is especially concerning because Intel's been spending so much on capital expenditures. So that's the second highlighted line you see below, additions to property, plant, and equipment, which in the 6-month period that ended June 29, 2024, the company spent $11.65 billion in additions to property, plant, and equipment. That's more than 10 times the $1 billion in cash flow from operations it generated. So that's a huge negative in free cash flow because of how much they're spending versus how much they're generating. Now, that improved in the most recent 6-month period hugely. It improved to a net negative of roughly 6 billion instead of a net negative of roughly 10 billion in the same time last year. So you could see that big change with a reduction in spending going down from 11.6 billion to 8.7 billion, and then also an increase in cash flow from operations from 1 billion up to 2.8 billion. So that's been the big improvement, in my opinion, driving Intel's share price higher, is investors are starting to see the benefits of those investments made over the previous 5 years, and also starting to see the decline in the capital expenditures, where that big investment cycle to build out and catch up in leading edge semiconductor manufacturing capability, the bulk of those investments are now behind Intel, and investors can look forward to seeing the benefits of those investments. So I have been bullish on Intel stock this year, and the stock price has been soaring. It's trading near its 52-week high, $38.18 as of this recording. It's up 3% today. The 52-week high is $39.65. But what's troubling me is the valuation now. The intrinsic value per share I calculate for the business is $26. The market price is 38. So it's starting to look stretched in terms of valuation coming into this earnings release. And so to answer the question, should investors buy Intel stock going into the earnings release? I don't see any urgency to do that. And especially when you combine the fact that the earnings release and the trading days following the earnings release tend to bring the most volatility to a stock price. If you look at the volatility of a stock price in a given year, the highest volatile days, or the days with the largest movements in share price, are typically following earnings releases. So with the additional volatility surrounding an earnings release, coupled with the fact that the valuation already looks stretched, I would say no, I wouldn't be buying Intel stock ahead of the earnings release. I would wait for the figures to come out, take some time to digest the financial figures and the updates from management, what they're saying about demand, what their deals with the US government and Nvidia really mean for investors, more details surrounding those deals and how it's going to impact investors, and then make a decision after those informations, after those results come out. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.